The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We are going to have Rich Anderson as our guest at the break for sure, 100%. Well, 99.9%. By the way, today, as everyone knows, is St. Patrick's Day. If you're anywhere near Chicago, they dye the Chicago River green today. And believe me, boy, they do a lot of drinking. I'm not a drinker, so I tried to stay out of the way when I lived there for those few years. But, boy, they really make a number on it. And they're, folks, back when we had the big floors, back in, 84, 85, it was they drink on the floor too. I mean, not obvious, of course, but they had their little flasks and stuff. So it's a big day. The other thing you don't know about Chicago, do you know that it is the largest Polish speaking city in the world, even bigger than the ones in Poland, like Krakow and the others? It's just truly amazing. They have a really big Polish area of Chicago, which I was always heavily involved in because I happened to marry a Polish girl. Okay, let's move on to the markets. Folks, we had something very unusual. I showed the Dax Index Chart. As you can see, we had the big move up, the big move down. We've stopped at major support. So he's really just, just really holding on both sides. I don't expect too much to happen today. It's a Friday and an up week. So it's going to be interesting to see how it ends up because, everybody that bought stock since, other than the people that bought NASDAQ, are underwater since the joint speech of State of the Union on the 28th of February. I want to give you a little heads up here on something, folks. As most of you know, I've been trading Forex for a very, very long time, almost 50 years. And let's take a quick look. I want to show you something because someone called me up yesterday and asked about the gap that we had in gold. And this is the one I want to show you, though. This is the Japanese yen cross rate versus the U.S. dollar. And I want you to see that big gap in the middle of the chart. That is at Fed time. There's a $700 gap between the bids and the offers. The reason why you don't see any prices there, folks, is that there were no bids. There were only offers, and the foreign exchange will not catch a trade unless there's a buy and a sell together. So if there's nothing but offers, there's no trading there. With eSignal and CQG and all these others, they're putting that price in because even though it's not traded there, it's part of the bid offer system, even though there's no trading. I hope you understand that, and that's the problem that you have. You have lack of bids, and on this, so it's impossible to get a sale off. And if you want to buy it, you could buy it anytime you want, but there are no buyers. The same thing. What happened on gold is there were no sellers. It was just the opposite of that. Now, the gold being a future still shows that there's no gap, which in fact that's not the way that it should be. This is the result of the work that Mr. Twentyman did all those years, but that's the reason why you see some of this. So when you're during a Fed time or some type of a major announcement or something catastrophic, and you get a terrible fill, that's the reason. There are no bids or offers. And remember that's a really important thing when you're in there trading. You don't want to be around Fed time because it's really a wild time. To keep that in mind, and that's what's important. Since we're talking about the yen, I wanted to go back here. Let's go back in time a little bit to our good friend Tom O'Brien back in 2012. He coined the term King Dollar. when the yen was trading at around 75, 76. And he was bullish that thing all the way up into the 120 level. What we're looking at now is we can see the lower highs from 1997 all the way down. Then we had a lower high in 2001, a lower high in 2005, and then we had a matching high in 2015. Now there's a possibility here, and I stretch this with a great deal of leeway here, that there's a possibility we could be looking at an ABCD structure on this, taking it back down, to the 90 level. That would be one big move, and that means there would be some really big shakeups over in Japan. But there's also this possibility. The other possibility is that we're just consolidating here at this level, getting ready to break out to the upside. It's trading around 113 and change today. We need it to get above 117. That's 4 handles. That's quite a bit. But if it can get above that level, then you've got a chance, for the market to move much higher to the upside. But right now, I think we're in this trading range. Soon, if we get below the 112.50 level, that was that previous low that we made just a few weeks ago, then that tells us that we're most probably, going to be moving down at least to the 105 level. That would be the 61% retracement, 106 level. It would be the 61% retracement over the whole range of 2016. And that would be pretty strong support. But this is what we're watching at this particular time here in the end. I wanted to bring that to your attention because many people don't understand that, and sometimes I don't either. But you do have these gaps that occur on some of these things because there's just no bids and offers. And when you're trading foreign exchange, I hope you realize that the data that you're getting comes from the 13 major foreign exchange banks. Those are the big banks, that do the foreign exchange business. They share their data. They put it into a data bank, and then people use it to see the bids and offers. And sometimes the bank's bids and offers will be very wide, so that's why you're going to see a really wide spread on some things, like maybe the Canadian dollar versus the Korean won or something like that. But if you're trading the euro, the spread is usually about 1 or 2 pips. And with the yen, it's usually 1 or 2 pips. But when you have these cross rates that are a little more esoteric, like let's say the Canadian dollar versus the Swiss franc, you're going to see a spread of maybe 7 or 8 pips. So those are the things that you have to consider when you're trading foreign exchange. That what I try to do is to keep the foreign exchange into the major 6. In other words, I look at the euro, the yen, the pound, the Canadian dollar, the Australian dollar, and the Japanese yen. Those are the big 6 that I look at, and those have very good liquidity. You have very little slippage except for times when the Federal Reserve or something else happens where you just lose bids and offers and there's nothing you can do about that. Most of the time you have a chance to not be in the market because they're going to alert you to the fact that this is what's happening. If you want to stay into the market during a Fed time, just look at the trend. You can see on this chart that we posted, this 15-minute chart, the trend was certainly down. We just had a major, Gartley pattern sale about 200 pips higher. So this is one of the reasons why, if you're going to be in a market during a report, try to trade in the direction of the overall trend. But even then, you're going to get some, big things. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks. We're going to take a look here at the Treasury bonds. As you can see, yesterday when it was actually Wednesday when the Fed acted, we had this big move up in the bonds where they rallied 3 points. This was exactly equal to what happened during the February 21st to the February 26th level. And so far, we've just been able to pull down to a 38% retracement. That has, bullish implications. How much more of a rally we're going to get, we'll probably have to wait a little bit. I was listening to John's guest, Steve Banger from Chicago, and he certainly had a case for higher interest rates, and that these rallies should probably be sold. And as you can see, this rally was exactly 382 of the high that we made on the 26th. That's a bearish connotation. So what this means is that we're probably going to be in a trading range for a day or two, maybe possibly more, before we get out of this and get it moving, in the right direction. So we'll see if this is going to be the case with the Treasury bond. So watch it very, very closely here. I think if we get above the 148.25 level, that would be exceeding the 382 that we made on Wednesday. Then I would expect the market to possibly get all the way up to the 61% retracement, going 2 handles higher up to the 150.20 level. So what we're trying to do is to go to a smaller time frame like an hourly chart in order to determine where would be a good entry point, because entering on the dailies is very, very difficult unless you have a wide threshold for risk, and I think that's something that most of us try to stay away from. It's better to have some small losses and some large profits than have some large losses and no profits. That's the old adage that we try to stay away from. Anyway, okay, we'll keep an eye on that. Now, we had a question about the gold stop yesterday that I talked about. You know, all of these platforms, folks, are different from each one. I mean, it depends on which platform you're in. If you're in something like Interactive Brokers, you know, which is one of the larger brokerage firms in the world, you might have been able to get a better fill. But if you're trading with somebody, you know, like FX Forex or FX Groundworks or somebody like that, Gain Capital, you know, one of the smaller ones, you know, there could be no bids or offers in there, and that's where the real problem would be. Even though the quotes are coming from the CME, the platform that you're trading from, you know, you might not get that good execution that you'd like to see. That's why I think it's, you know, inappropriate to be in a position during the actual announcement on these things, because wait till the announcement is out and then you'll get your chance. Usually it'll be a better opportunity after the report anyway, because that's when the emotionalism, you know, is really the greatest of what we're looking at here. Another question that someone's asked me today is this rally that we've had here this week has been, you know, basically NASDAQ stocks. That's correct, folks. You know, we have that NASDAQ 100, the NQ. You know, that's basically 25 out of those 100 stocks. Those are the really high-priced stocks. You're talking Amgen, Google, Facebook, Apple, all of those, and those are, you know, they're triple digits, and those are the ones that make this index really strong. That's why the NASDAQ it's a better index than the Dow, because the Dow is not really a good indicator what the market's doing, because you're looking at price-weighted stocks and not cap-weighted stocks. They've tried to get the Dow family to change this for many, many years, and they just won't do it. So anyway, this is just some of the feedback that I've tried to answer some questions for of what we're looking at right here. Now, the other thing that we need to focus on, a week from today, actually next week, we're going to be looking at the Spring Equinox. This is a very, very powerful thing in ancient astrology. This was something that was, you know, put on clay tablets going back 7,000 years to the Sumerians, and before that, after that, the Babylonians also, you know, talked about this. This was in Dr. Andrew Lowe's book, The Evolution of Technical Analysis. And we have, I believe, we're going to have a major eclipse in the United States on the 21st of August, and that's going to be visible all across the United States, from North Carolina all the way to Oregon. It's going to be really going to be looking at it. Duffy's asking a question, is this Norm Winsky's change day? His day was yesterday. That was the day he was looking at. He was in a sell zone, and I believe it was yesterday. Yes, it was yesterday. And so whether that's going to be, if we take out the highs that we made again in the NASDAQ, which we're not very far away, that's not a real indicator, because you have to look at what the Dow is doing, because that's what they report on CNBC and Bloomberg and Financial Times, everything like that. But the New York Stock Exchange Index hasn't been rallying nicely like these others. So that's another thing that makes it really interesting to see if it's going to, going to be a interesting spot to look at. Anyway, we'll take a look at it. By the way, thank you very much. I've been informed that tomorrow is apogee. That's where the moon is farthest away from the Earth. Perigee is when it's as close. These are the times when we have earthquakes, and we usually within a day or two of these things. But remember, the full moon was was on Sunday, and here we are Friday, so nothing really dramatic has happened as far as, any geophysical things like earthquakes, but that doesn't mean it can't happen. But those are the times when it usually does, because that's when we have the strongest gravitational pull from the Earth to the moon. Anyway, well, we'll see if that affects the market or not, but we'll have to just to wait and see. So far this morning, we're holding our own. We're up in just about all the futures, and the NASDAQ, of course, is the strongest. Actually, the S&P is the weaker of the three versus the Dow and the E-mini S&P and the E-mini NASDAQ. The S&P is the weaker of the two. Now, several people have asked me about the gold. We've had this big move off of gold. What I'm waiting for, folks, is I'm waiting for a $17 correction from the high. That would take us down to about the 1217 level. If we get gold down to that 1217 level, I think you have to take a look at it from the long side, because the way that it came out of here was with a whole lot of power. Silver came out too, but not like what gold did. Gold came very, very strong. And so it's something that we want to watch closely as far as something we want to see of, what's going on. And that's the main thing of what we're watching here. Anyway, we'll watch this very, very closely as we see. Now, the numbers to pay attention to today in the S&P, of course, we're going to be looking back at that 2083 level. That should give us some area of resistance. And then, of course, support would come in around the 2060 level. That would be higher than the bottom that we made earlier in the week. But we're basically in a trading range right now with nothing happening to make it interesting. Now, the euro has, got to take a little break here. We'll be right back with Rich Anderson.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Rich Anderson on the line. Rich, are you there?
You bet.
How are you doing today?
Doing great.
Good. Listen,
Doing
Rich.
for the warm weather though.
Yeah, I'm sure you've been pretty warm up there in Minnesota this year, though, as I recall.
Right, in February when I was down in Naples. Now I come up here, and first day I got here, it snowed that night, and then it's been cold and snowed a couple of times since.
Oh dear.
Yeah.
Rich, we were going to talk a little bit about. We've got don't we have a planning intentions reports coming out pretty soon here?
That's on March 31st. That'll be the big number that'll get everybody going, and the trade has kind of been talking about in the last several days about the acreage growing for soybeans, and you see that in the market drifting lower. The same opinion was held last year, and not much movement occurred in the difference between the number of acres of corn that were planted and the number of acres of soybeans were planted. But the expectation is much higher that because the corn is low relative to the soybeans, number one, and because if I'm a farmer, when I plant the corn, it's costing me a whole lot more money in seed and fertilizer than if I plant soybeans, which take a whole lot less fertilizer. And the bankers are a little more skittish this year and a little, they're just a whole lot more conservative than they've been in the past. And so they would urge their customers to, try and put less dollars into the ground. Now, even with the weather being nicer this year, farmers don't start planting any earlier than X because it takes crop insurance. Nobody plants, well, hardly anybody plants anymore without crop insurance, and the government dictates the dates that you can start in your planting. So even though the weather might have been really nice, although it did turn cold, and let's say it turned really nice right away again, they'll still have to stick to the insurance dates.
They're almost bound by natural law to do that now, aren't they? Because they don't want to take the risk involved with, doing a crop without some kind of insurance.
Right. You're putting, hundreds of thousands or millions of dollars in the ground, depending on how big a farmer you are, and you just can't afford that risk. I mean, the seed, when I was, a kid and on the farm in South Dakota, and my dad was a DeKalb corn seed salesman, would maybe be $35 a bag. Now it's $150 a bag, and that's for basically a bushel, 56 to 58 pounds of seed corn, depending on the size of the kernels, et cetera.
Now, Rich, I put a chart in for Caterpillar, the big equipment that does a lot of deer and all these. The stocks look pretty much the same, but going back to 2011 when we had the big run up in the grains, we've been in basically a long-term downtrend in this. Is this indicative of farm prices? Because, we're relatively low over, the last 4 or 5 years in prices. What is your assessment of this?
Well, I'm looking at a monthly chart. As you know, I don't really follow stocks, but I'm looking at a monthly chart. It looks like it made a high in 2011 at around 115, and it's low at the beginning of last year of 2016 at 55. Now, they also make a lot of commercial construction and mining equipment, and so when you saw that low last January in 2016, that had a lot to do with the world economic outlook for mining and oil and all these other things. And frankly, it's gone from 56 up to this last month's high was 99 and change, 99 and a half or something like that. So farming is they're trying to grow that as a bigger portion of their product line, but they're also very big in mining and the other industrial industries, and you see that by the low that was made in January of 2016. But it does look like it's softening now. The monthly chart is hanging around last month's lows, and that's usually not a good sign. I would expect, would pull back into the 80s, something like that, 79, 80.
Rich, we have a question from one of our listeners about the regulations in the farming business. You know, we've had CERT about regulations on EPA for the auto industry and the oil and gas stuff. Are farmers under regulations also that could affect their productivity or their ability to function?
Not minusculely. Their carbon exchange. Some farmers, if they're really keeping track of stuff, can sell some of their carbon credits, which is a plus for them. But nothing like the EPA. You can't, as an example, let's say I have some lowland in one of my fields and I want to drain it. It takes practically an act of God from all these different agencies in order for me to be approved of draining that lowland. And if I didn't get all of those approvals, then I could lose my government crop insurance, et cetera, like that. So, I mean, they have a lot of leverage on you that way, but no, not like the EPA. That's very egregious compared to what farmers deal with.
Okay, we have another question about farming, and that is about potash, and I'm going to put the chart up of POT because I think that's one of the big ones for fertilizer and stuff.
Right.
So if there's anything I should be able to talk about with a little bit of interest would be fertilizer, because many people have told me I'm full of it. So anyway, the prices of fertilizer have been coming down quite a bit over the past few months.
Right, but if you put up the chart of natural gas, the natural gas came down first. There's two things going on. Natural gas has gotten cheaper and cheaper, and there's so much of it, and so you have a combination of things that the farmers are less willing, as I said earlier, to spend a lot of money on corn, and even if they do plant corn, they'll use less fertilizer, and so you're seeing less demand for their product, and one of their natural gas is abundant in so many different places, and so they're getting competition. They're getting a drawdown in demand, and that's affecting the price of that stock, which to me, I might have to look at that after the show.
Okay.
I certainly have it on my radar.
Okay. Oh, we have a question. What's your number one trade for the next couple of months? Do you have anything that you're watching closely?
Well, as I told you last year, at this time of the year, once the farmer starts to put his money in the ground by planting, the grain markets seem to come alive. Now, yesterday, the soybeans in Brazil, in terms of real, made new lows for the move. That's never a good sign. We've got a huge crop coming off in Brazil and Argentina. I'll be looking for some kind of weather effect that could cause a 30-40% move in the ags this summer. There's nothing on the horizon yet, but I'm going to be watching for that. I guess I'd be looking at the gold and silver.
Well, let's stay with us, Rich. We'll be right back.
All right.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new market-safe core commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI, oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Hey, we're back, folks. We're talking with Rich Anderson of Anderson Capital Management. And Rich, I've posted a chart into the den of November soybeans. That's new crop. This looks like a really bullish long-term chart, Rich. It's totally different than what the old crop looks like.
Yes, it does. But we have to get to that March 31st report. I mean, some of these guys are projecting 92 to 94 million acres, and that would rain a dollar down on that market. So I'm just I'm being a little cautious, a little patient.
This is why we have you on the air, my friend. Thank you.
One thing that kind of surprised me was the monetary base. The St. Louis Fed put out the monetary base of the U.S., and we'd been at around $4 trillion, and we'd been drawing it down to around 3.4, and it's sprung back up to around $4 trillion. That, just thinking of it as that's a whole lot of money running around in this country, and of course you can see it in the price of the stock market. I'm kind of looking for that level where the copper tells me that the lows are in and the economy's going to get better. I've got my eye on copper for this year. I don't really trade it very often, but I do have my eye on that. And with all this money running around, the silver is going to, probably be the horse that I go on. The Fed, when they raised, and then everybody thought that was a negative, and then yesterday we were up big. Well, they changed the dot plot from 2020 to be when they end their raising to 2019. And in 2019, they figured they'd have it at 3%, with a 2% inflation would give us a 1% real rate. I think they're behind the curve. I think their messaging is going to start to change in the next several weeks. But the bottom line is the amount of money that's flowing around in the economy, they have yet to address how they're going to start to draw that down on a permanent basis. Because we blew it up after the crash in 08, 09, and now, we have to normalize it somewhat, and normalize it would maybe get it back down towards $2 trillion over the course of the next 2 or 3 years, and there's several ways they can do it. But until then, there's all this money to play with, and, it's going to seek these different markets.
Well, Rich, you and I are about the only two people on Earth, I think that this quantitative easing has not been a good thing, but I agree with you. It's going to be hard for them to pull some of this back, because it's easy pumping money in, but taking it out is going to be a lot harder because people get used to it, and that makes it a little more difficult. I've never been able to understand quantitative easing. I've asked some really smart people. They've never given me an adequate, description of it, but we'll wait and see how that goes. Anyway, the next question that we have is the main thing we'd like to look at is this corn market that we've been watching for quite some time. Now, this is the weekly chart that I'm going to bring into the den here. You'll see that this for long term, Rich, this May corn chart has potential for some real bearishness because of the fact that we had this big ABCD pattern from August, through March, and now we've sold off a little bit. And with the planting intentions coming in March, if it breaks down, we could be looking at sub $3 corn again. Is that possible?
That's possible, but probably not probable, because as long as our exports in ethanol, and that's, we'd have been around $3 right now if we hadn't had the real big pickup in the ethanol, and that's been going to South America, and that was because of their sugar problem that they had down there, because their ethanol is rum and our ethanol is whiskey, to put it in language that everybody can understand. But that's what's kept it up, and I would think that until we, get into the middle of July, which is when the average daily moisture need for corn peaks, that's why you normally see a seasonal high at that time, that it'll be limited to maybe 350 to 340. And then particularly if they cut back on acres of corn, that'll also limit it. But the Argentines yesterday announced that they think their corn crop is 37 million metric tons and their beans at 54.8. Both Argentina and Brazil are growing massive crops, but the prices on the downside that you're talking about would probably not occur until after we get through some, there's just too many variables for weather that people aren't going to be willing to press the markets, in my opinion, prior.
Okay. You've been very good with the weather because you have some great sources. Now, what's your feeling? Is there a possibility for an El Nino or El Niña this year, or anything you can share with us on weather?
Nothing is developing at this time, and right now we're looking out to April 2nd. When you're looking at weather, you talk about futures markets, you're talking way out in the future. We're now looking out at April 2nd. I can tell you it's been cold in the soft red wheat area, and that's helped to keep that market firm and may hurt the crop more than they expect, which would give it a spike. It's been dry in the hard red wheat area, which is Kansas, Oklahoma, but there's rain forecast, although the rain forecast this morning is less than the rain forecast last night, and we have to see what verifies, from the forecast what actually happens. And if forecasts don't turn into verification, then all of a sudden that can light that market up. So, that's the market that we're watching the closest. But the acreage number on the 31st on the corn, if they cut back corn acres 3 million acres, that would automatically keep the old crop corn firm. And the guys aren't going to be willing to let go of more than X until they're sure that they got a crop, and that tends to not happen until your moisture peak is over for your daily needs for the growing plant, and that's in July.
Yeah, and we, even though we have, large supplies, if you look at it on a global basis, any bad crop any year could cause a famine that would lead to some real serious repercussions across the world. That's never going to change. So that's something that we have to face every year. Some of these things that occur with craziness in the weather. Rich, the other chart that I've just posted in here is the picture of July wheat, and that's been acting relatively well compared to some of the other grains. Now, it appears
Which
to me
one,
that,
Kansas City, Minneapolis, or Chicago?
No, I'm looking at Chicago. I don't.
Soft red.
Yeah,
okay.
Soft red, yeah. But it looks like we were forming a head and shoulders pattern here. There should be some pretty good support between, 450 and 434. Anything you'd like to share with us?
Well, the CFTC comes out. CFTC comes out every Friday with the, the positions, and the hedge funds are short a bunch of this wheat, And as I mentioned, we've got weather concerns because it was too cold here and there, and that does affect your yield. Certainly does. When I was growing wheat out in South Dakota, we don't do that anymore. It's more corn and beans. But I think this is just a pullback that's going to find itself having some support because there's going to be all these shorts that are going to get worn out, and then any weather concern, and I mentioned two of them that can light it up. I mean, our planting acreage of wheat is like the lowest it's been in 50. I heard it was the lowest since 1919. It's certainly in the last 50, 60 years. I mean, so
wow.
We just don't have it. Yeah, so the potential's there, Larry. We don't have a bumper crop every year. We had one last year.
Hey, buddy, thanks for joining us. We'll have you on after the crop report.
All righty, you take care. Trade
thanks
well.
a lot, buddy. Yeah,
Bye-bye.
Rich Anderson Capital Management.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. And what we're going to be talking about is we're ending up the week here. We've had a little bit of sideways action since we broke earlier in the week. Nothing's really happening. I think we're probably going to be waiting to see, and the next cycle that appears is going to be right around the equinox, which will be on the 21st, 22nd. So watch that. Now, I posted the chart of the euro over the last couple of weeks, and as you can see, we did complete this ABCD pattern that we've been watching. this week. I went right up to the exact number, 107.80. We've backed off about 50 pips so far. This is going to be interesting because should we get above the 108 level, this is going to tell us that U.S. dollar index is possibly heading down, towards that bigger ABCD pattern that we looked at. And this is real money, folks. This is a market that is thousands of times bigger than the stock and bond market. So, it's something that we should follow and pay close attention to, because this is how they keep score in the real financial markets across the world. So watch that closely. Right now, the stocks are, up a little bit. They're holding their own. We'll see how they end up for the day. But right now, we want to watch these banking stocks, as we heard from our good friend John Logan and his guest Steve Banger. These banking stocks like Goldman Sachs, J.P. Morgan, Morgan Stanley, they're not acting as well as they were before. They didn't make new highs on this run. In fact, they were selling off when the rest of the market was going up, and this was after the Fed gave them the best news they could possibly have. So the old market adage is, if you can't get a market to go up on good news, what's it going to go up on? So keep that in mind when you're watching, some of these stocks, because the Dow is so heavily influenced, by these high-price stocks, as Goldman is the highest price stock in the Dow at 240 something and change. So you've got to factor that in as we're looking at some of these things as we go through here. The gold, my feeling is we're going to get a $17 correction to buy it.
TFNN has just launched a special event in Tampa with Tom O'Brien taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Luncheon Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of TFNN.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th.